Hey, this is Justin with daytradethemarkets.com. It's about 2:53 on Wednesday the 19th. It's FOMC day. It's been a wild ride, but I took a small trade here. Got short right there at 1637.50, and I've got a first target here at the low of this level 3 selling bar right here, and then a second target. I'll just spread that out a bit and see if we can get a runner on that. Um, so we got that filled. I'm going to move this down, lock in essentially a break even at worst, a little bit of a profit there. The logic here on this trade basically was we knew it was going to get a little bit wild here on in the FOMC, and we had our first move was a down move with this high velocity move in level 3 bar. And FOMC, you got to be careful. You kind of have to wait till some side wins. And so basically the way I look at that is, I'm looking at this area here to potentially hold. And then you get a little bit of a buying wave. So you're looking at this area to potentially hold down here. And so you can see we just got into the selling held here, the buying held here, and you could see the selling held back here at the resistance zone. The buying held down here again, and we back up. And so we had just kind of consolidation, and then we finally had this breakout lower with this level 3 bar. And you can see our filter is red. Our right where I got in, I was doing it right at the resistance zone there at 37.50. Also at the high of this level 3 bar, which we know should act as pretty good resistance. So it's just kind of the idea of that FOMC day is going to be pretty wild, especially today. It was kind of an interesting day, and so I just kind of wanted to see which side would win. And so again, just to kind of go back over this, I know it's a little confusing and it looks probably pretty wild because it's pretty intense looking chart, which is kind of the norm. But again, selling wave started here. We couldn't really get above that. We couldn't really get below it too much. Then we had a little bit of a buying wave. Same thing. It kind of consolidated the market. And we had, the market consolidating within this support resistance area here. Another wave of selling, level 3 selling, and again, couldn't get through there, tested the high, and then we finally broke out below this initial selling wave. So, another way to put that is, let me, on an FOMC day, you can sometimes get a bit of a runner. So let me just kind of keep this out in front of it. Not to get greedy, but just kind of, I prefer to trail this position, because I've already locked in at least a small profit, and I can deal with that. On FOMC day, you can sometimes get some pretty good runners. So what I'll do is just bring this to break even at this point. So the second half of my position's at break even, and I'm just going to try to hold this until I have some evidence that buying is coming back in. So that could be a buying level 2 or level 3 bar that comes in and has its high taken out. It could be that we get some good activity above the high of this bar, which again should act as some good resistance. But I'm not in any hurry to move my stop down. My thinking here is FOMC day, you can get some pretty good runners. So let me just hold this thing and see what happens. If it really takes off for me, great. If not, I've got a small winner locked in. So it's kind of the logic. So I'm just going to hold this as long as possible, really. And if it just keeps going down and down, all the better. If I do start to see some actual evidence that buyers are coming back into the market, then I can always get out for whatever I get. But that's kind of the logic that I'm using at this point. Again, this is even the S&P market. It's a 1-minute chart. You can use this on literally any time frame that you want. I like the 1-minute chart. And so, just kind of waiting and seeing here. We've already sold off 7 points. I know you can make the argument, lock in some profit there. The way I look at that, I made 2 points on, again, this is a relatively small position based on, a volatile day. But I've locked in 2 points on 2 contracts. So I've got a small profit guaranteed, got break even on the final. Theoretically, I should see some buying evidence before my stop would be hit, and I can get out a little bit earlier. But I want to give it some room. I want to see if this thing can really take off. Just because on this type of a day, you can get some pretty good runners. I haven't even looked at what the FOMC notes said. I don't really care. I just kind of follow what the evidence is telling me. And again, we had early on we had the selling wave, but again, FOMC, you got to be careful. Selling wave, buying wave. another selling wave, and we finally broke through. So that's kind of how I like to look at these type of volatile days, is wait to see if there's a winner, and the evidence was showing us there was a winner. Another way to look at that is we've got this extreme selling, strong buying, extreme selling, extreme selling, extreme selling. So at this point, sellers are in control. Filter is red as well. It's making me believe that on this type of a day, I'd want to be on the short side and try to lock in some early profit on this type of a volatile situation and see if we can get that home run type of a trade. So, that's the logic. I'm just going to keep getting this out of the way here in case it really takes off. And again, just hold this and wait until there's actually buying evidence that comes back into the market. Otherwise, I really have, the reason I got in is still valid, in other words. Okay, so a lot of times I think what happens to traders is, we want to lock in our profit. We want to make sure we make money because we're scared to give it back. And I understand that. In this situation, though, I want to make sure I've got a reason to get out, because the reason I got in is still valid. Okay, here's a level 2 selling aggression bar that just came in. So, at this point, I have no reason to get out. I know I'm kind of rambling here. I'll pause this video, but that's the logic behind it. What I found is, trade management. Not what I found. This is not like I'm a genius about this. This is kind of common knowledge. The longer you're trading, exits are really where you make your money. I mean, the better you get at entry, then the lower risk that you can get into trades with, the better, obviously. But where your money is really made is on the exit side. In other words, minimizing loss when you're having losing trades, and you will have losing trades, obviously. You want to minimize loss when that happens. And on the winning side, when you get a winning trade, you want to try to maximize the win on that. So in this case, generally speaking, I would probably move my stop down. But again, this is one of those days where you can occasionally get some huge runners. So I want to give myself that opportunity. I have no risk on the table at this point. I mean, you could say I have 10 points of risk that I'm giving back on 2 contracts. That is true, but I'm not likely to give all that back. Certainly is possible, but I want to actually make the market prove to me that I should get out, because I think there's an opportunity here for potentially a big move. So hopefully that makes sense. And what I'll do is I'll just pause this video and come back in as situations dictate. Okay, so now you see we have some buying evidence that's come in, and so the high of this buying bar is at right around 30. I want to give the market a little room, but I'm starting to see some buying. So what I'll do is I'll lock in 5 points of profit on that final. Now you can make the case to keep it even higher above this level 3 bar, but at this point I'm actually seeing some buying evidence, and so I want to protect some of this that 7 points that I had locked in. So now I've guaranteed myself 5 points on this final, half of the position. But again, it's because the market is proving to me that there's actually some buying that's coming in. So hopefully that makes sense. And I mean, this is a more normally I'd put it about 2 ticks above the high of this bar, which would be right in here, and I would have been out of it. On a day like today, it's more volatile, so I want to give it a little more room. So that's the logic there. And if I get taken out, I get taken out. That's fine. At least I waited until the market showed me that I needed to get out. So. And again, I think you could also make a case for putting it above the high of this level 3 bar here, or even the high of this high velocity move, because those quotes should act as resistance. In this case, though, I've got a decent profit. I just want to make sure I protect at least, basically half of it. And as we've seen, there is some buying coming in. There's more buying there, so I'm just going to keep my my stop there. And again, just because there's some level 2, some strong buying, it doesn't necessarily negate the extreme selling that we've seen coming in here, and here. It's just telling us there is a bit of this pure wave of selling has come to an end, and there is some buying coming in. Now, the ideal situation is if this buying, this pushback gets taken out, the low of this bar gets taken out quickly, and we have another run lower. But at least it's showing me this pure wave of selling has come to an end. We're now at least a little bit more two-sided in the very short term, and so I want to protect myself. If I hadn't seen that, I would still have my stop up at the break even. But now I am seeing some evidence, so I want to at least protect myself on half of it, and give myself a little opportunity for this thing to take off lower. We'll see. But that's the logic here. It's basically trying to weigh the opportunity versus the risk, and so take some risk off the table and leave I think there is some opportunity left, so I want to leave myself a little space, but take some risk off the table because I am seeing buying coming into the market a little bit. So hopefully that makes sense. And again, this is a little bit different scenario than a normal day. When you have a pretty important FOMC meeting, it's going to be pretty volatile, so you have to be careful and give yourself a little more room and trade a little bit smaller. But that's the logic on that. Hopefully that makes sense. If I get stopped out, that's fine. It's a good trade. I think people get wrapped up, and I know I used to do this a lot more than I do now. I still do at times, but you get wrapped up in trying to be perfect, and you're never going to be perfect. You just try to again manage risk the best way you can. Risk on the initial side with my stop up here, and then risk now that I've got some open profit that is at risk. And you want to have a balance between the opportunity that's available and the downside. And so if you just manage those two factors and do your best based on I like to use this evidence, but whatever evidence you're using, you're gonna find yourself in a pretty good position. So more than likely this thing is going to get stopped out, but we'll see. The market did decelerate here a bit, and so there's a chance that I got lucky by a tick, but we'll see. So I'll pause this and pop back on when, well, let's see.
Stop.
There we go. I got stopped there. So anyway, 5 points on the 2 points, or I don't know, 2.5 points on the first half of the position, 5 points on the second half of the position. Low risk trade, potential for even bigger profit. I call that a pretty good trade. So hopefully that made sense. Again, it's just a little bit of a different day and a little volatile, a little wild, but just trying to make sense of it. And that's that. So if you have any questions, let us know. Talk to you soon.